Hello, everyone. Thank you very much for joining us. My name is Bryn O'Brien. I'm the Executive Director at ACCR, the Australasian Centre for Corporate Responsibility. We're a research and shareholder advocacy organisation based in Australia, but with a portfolio of shares in Australia, Asia and European stocks. Really delighted to have you with us today to discuss our work along with our investor partners, Man Group, HSBC Asset Management and Amundi in taking forward this important engagement with Jay Powell. The order of events today, we've got a half-hour presentation. We really invite your questions using the Q&A function at any time. We will have sufficient time for questions at the end of the session. I'm going to give an introduction and a background to our engagement with the company. We're really fortunate to have Jacqueline Towell from Transition Zero with us to present to Transition Zero's company analysis, looking at some specific concerns that we have, that Transition Zero can speak to with Jay Powell and its decarbonisation plans. Then we will have Sachi Suzuki from HSBC Asset Management and Jason Mitchell from Man Group presenting on investor perspectives with 10 minutes for questions. I'll also say we're fortunate to be joined by our Japanese legal counsel, Asahi Yamashita, who can address any questions that you have in relation to the Japanese legal framework under which we have filed. At the outset, I want to say that the Japanese regulatory environment for shareholder coordination, it does have some very important requirements. In this presentation, we're not seeking to solicit your any investors voting in any way, but rather put forward our perspectives on why we have engaged with the company. If you have any questions about that, please do let us know. So in terms of high-level summary of the proposals that we've put forward, it's a package of 3 key asks designed to enhance the company's climate governance and protect long-term corporate value. These are targets and reporting ask, a Capex alignment disclosure ask, and a remuneration linkage disclosure. We think that these are really the essential components of enhanced climate governance in a rapidly decarbonising environment in Japan and worldwide. The drafting that we settled on and put to the company is high level and non-prescriptive. This is to reflect the need for the company to have discretion in the implementation, and it is similar to proposals that have been put to other companies around the world. An example of that would be the work that we have done with AGL in Australia, another major coal-fired power generator. The legal environment requires us to frame each of the proposals as standalone amendments to the Articles of Incorporation. That is the way that proposals need to be presented in Japan to ensure their validity. So while we of course think that the entire package is desirable to support and to have implemented in the company's articles, each of those proposals does stand alone. And it is not unprecedented for climate governance and climate governance structures to be reflected in company articles. There is an analogous situation under UK law where if a resolution passes with 75% of the vote, it becomes a special resolution and goes into the company's articles. So examples of that in recent years are banks' resolutions that have been put to HSBC and Barclays. The HSBC one, of course, a board proposed resolution that went through with a very high level of support. Turning quickly to the summary of our engagement, we've been undertaking engagement jointly with the company since January this year, owing to our jointly held concerns about the company's strategy setting under its Blue Mission 2050. Our specific high-level concerns, although I'll hand over to Jacqueline in a moment to speak to these components of the company strategy in more detail. Now, at a high level, our concerns are that the current targets are not Paris aligned and that they exclude the company's growing international business. that there are substantial greenhouse gas emissions and revenue from the coal-powered business in the company's strategy over the long term, with no plan to retire coal assets. Instead, there's what we see as an overinvestment in prolonging the life of those emissions-intensive assets through speculative and expensive technology. And we think that there are other options for the company that would better protect it from stranded asset risk and so on. And underinvestment in renewables when it compares to its peers. I know that Sachi will speak about that in a bit of detail later in the presentation, and no remuneration linkage. So there is no emissions reduction component of the company's remuneration structures. So as I said, we've been engaging with the company now for 6 months, and resolutions have been raised after or owing to the company's lack of responsiveness, not lack of responsiveness in not taking meetings. They've certainly met with us on a number of occasions and had long discussions, and we credit them for that. But there's been no flexibility, and there's been no, I guess, meeting of the concerns with action or commitments over the course of that. And we did feel that shareholder value would be best protected by raising these resolutions and generating a conversation between management and shareholders towards the AGM. And I'll hand over to Sachi to speak to the HSBC Asset Management perspectives. Thanks, Sachi.
Thank you, Bryn. Hi, I'm Sachi Suzuki from HSBC Asset Management. Yeah, I will leave detailed analysis of the company to Jacqueline, but I wanted to give you some context about Japan and the shareholder proposal and why we chose Jay Powell. So as many of you know, the Japanese government has a commitment to decarbonize and achieve carbon neutrality in 2050, and also has a target to reduce the CO2 emissions by 46% by 2030 compared to the 2013 level. But the current electric utility sector in Japan is very heavily reliant on fossil fuel, and especially coal accounts for 30% still, and that Jay Powell is contributing large part to it as the largest coal fleet operator in Japan. And currently there's only about 20% of renewable energy, but 20% of the total energy and electricity is derived from renewables in Japan. And last week, G7, including Japan, agreed to predominantly decarbonize the electric sector by 2035. So from where Japan is at the moment, that there's a long way to go to achieve this target. So in terms of climate shareholder proposals, these are relatively new to Japan and only started in 2020, but increasingly rapidly. And this year we have already seen 4 other companies targeted by the same group of NGOs on similar reasons. But we wanted to highlight that this one at the Jay Powell is the first one that led by investor group, and as a result attracted a lot of interest from the investor community, I think globally. And as Bryn mentioned, the amendments to the article is the standard way to put forward this type of resolution in Japan for various reasons. So this shouldn't really be a source of concern from our point of view, because as Bryn said, that this would achieve a similar result as the UK special resolution. And we often get asked why we targeted Jay Powell. So as I mentioned, Jay Powell has the largest coal operation in Japan at the moment. and they derive over 60% of their electricity from coal at the moment. And I think Jacqueline will go in more details, but we have a lot of questions about the company's plan to decarbonize while maintaining coal power, but using various technologies that we and many other people don't think will be viable. And then looking at where they are against them, and so according to our peer analysis, the company is also lagging behind its peers. There are about 10 other electric utility companies in Japan, but Jay Powell's target, for example, for the 40% reduction by 2030 is a lot less ambitious than many of its peers. For example, Kyushu Electric Power has a 65% reduction target for the same 2030. And JERA, which is a joint venture between TEPCO and Chuba Electric Power, they're aiming for 60% reduction by 2035. And also in terms of renewable energy, Jay Powell's plan to add, I think, another 1 gigawatt, in total of 1.5 gigawatt of renewable capacity by 2025. And that's much less ambitious than some of the others, like TEPCO, which is aiming for 6 or 7 gigawatt by 2030. At Kyushu Electric Power, also aiming for 4 gigawatt by 2025. And we challenged this during engagement, because they only have a target for up to 2025. They don't seem to have a longer term target or plan to set another target. So this is from me.
Thank you, Sachi. Jason, I'll move on to you, and I'll just note that there is a question in the chat about if you could address this in your comments. The question is, Jay Powell has expressed its opposition to all of the items in the shareholder proposal. What do you think about that position, and will you take any additional measures in response? So over to you, Jason.
Yeah, sure. I wanted to touch on 3 things, and then let me give some thoughts on that question. So, first, in terms of the interaction with the engagement, and just for context, Man Group has been sort of I'd call it a meaningful shareholder historically with the company. We've touched on the carbon intensity for Jay Powell in the past. Working with ACCR, HSBC was the first time that we started really kind of formally in a collaborative setting addressing this. As Bryn mentioned, we began engaging with the company in January. I think we had a number of conversations really sort of unpacking or kind of peeling back the layers around a number of issues. I mean, first, the idea of sort of this carbon neutrality, which was set out by the Japanese government last year. Carbon neutrality, not net zero, i.e., so what's the role of, to what degree do offsets sort of play in this whole equation beyond just technologies and transition? That I think highlighted a number of issues that we began addressing with the company. I mean, clearly short and medium-term targets, and a lot of, and I think, in particular, disclosure and transparency around that transition, and that alignment between remuneration and these carbon, this transition plan. The one thing I'd say is that for Man Group, speaking for ourselves, I mean, this represents, the second formal filing of a shareholder resolution. The first one happened last year. This is, in our opinion, sort of the last resort. It sort of signals kind of a breakdown, kind of a failure in that dialogue. I don't think that this is the general course, or it has to be. One thing I think that I think it's very important to point to is the fact that we, alongside ACCR, and Storebrand have been working with JFE Holdings, another big carbon emitter in our portfolio, also since January, and have made very different gains. It hasn't involved a shareholder resolution in terms of announcing that. We've ended up about 2 weeks ago announcing with the management and the board, effectively addressing all three of these similar points. So I do think it kind of points to the fact that the Jay Powell isn't the normal course in this market. They may, in fact, actually be an anomaly in terms of these engagements. The second thing is in terms of Capex, as I hope you'll hear from Jacqueline, there are a number of misgivings that we have had. I mean, clearly carbon capture holds a lot of promises, but when you look at many, including Jay Powell's transition, it's very back-end loaded, very, very heavily dependent on as yet to be commercially scalable technologies, whether it's blue hydrogen, green hydrogen, clean coal, even markets using ammonia as a feedstock, that clearly there are markets from an agricultural perspective, but you're talking about sort of establishing new markets from an energy perspective, and then sort of the question or this debate around the capacity for sequestration. I understand that there's sort of differing views around that, but again, it's a bit controversial. So I think there's a strong, compelling argument to ask for some alignment in terms of the company's spending and the progress relative to this. And the last point is remuneration. From a Man Group perspective, it's sort of built into our policy. I think it's fair to say that it really does bring into alignment the shareholder interests in terms of managing climate risk, as well as incentives for the company.
Thanks, Jason. Would you like to speak to that question about Jay Powell's response to our resolution?
Yeah, actually, can you repeat the full question again? I do remember it now.
Yes, no. So the question was just that Jay Powell has expressed its opposition to all of the items in the shareholder proposal, so across all three targets, Capex and REM, and just seeking your and our response to that.
Sure. Yeah, look, my view on these things is this is a process, and kind of persistent pressure, I think is the message, and sort of some of the takeaways that we've had from our past engagements and filings over the last several years, and something that we will kind of continue with. So it will be interesting to understand the support for this. I think because it's fairly new in the Japanese market, there've clearly been some lessons about how to write these filings in terms of to what degree you make them principles based in a Western fashion or more prescriptive. So again, I think this has been a really important learning lesson to, one, raise awareness for it and figure out how to actually operationalize this stuff. But look, no doubt, I think particularly with the JFE Holdings engagement, the success of that in mind, this past month, I think it's cause for continuing to be focused on Japanese biggest emitters.
So hi everyone, my name is Jacqueline. I'm an analyst with Transition Zero, and in the next 5 minutes or so, I'll be sharing with you some insights of our recent analysis on Jay Powell's decarbonization strategy. Quickly about us. We are a climate analytics not-for-profit, and we combine data science with technological, economic, and financial analysis to inform decarbonization decisions in the power as well as heavy industry sector. So essentially what we have done here is we have condensed our analysis of Jay Powell into 4 key headlines. Firstly, Jay Powell's finances are heavily co-reliant, so this actually exposes them to significant transition risk related to climate. Secondly, Jay Powell's climate targets, as has been discussed by previous panelists earlier, is that they're clearly lacking in ambition as well as clarity. what this actually means is that they not only fail to meet investor expectations in terms of whether they're aligned with net zero scenarios, but also the fact that they're actually missing out on a lot of implementation strategies and details on how they wish to meet their stated goals. Thirdly, Jay Powell is actually currently banking on a lot of the nascent technologies that have been mentioned earlier: ammonia co-firing, hydrogen co-firing, co-gasification, as well as carbon capture and storage. And these technologies have neither met the technological maturity kind of benchmark, and they also don't really pass the financial test as well. So this is actually indicative of significant downside risk for Jay Powell moving down in the future, and this might be seen as just Jay Powell kicking the can down the road on their climate related strategies. Now, lastly, Jay Powell is not really seen to be investing in the future with its current allocation of Capex spend, and we think that more can be done to rebalance the investments and focus on key growth areas such as offshore wind. Now, in the next few slides, we'll go quickly into why we came to these conclusions. So here we have historical financial reporting reported by Jay Powell on their coal-reliant operating revenue dating back till FY 2010. And we can see that although the share of coal-reliant operating revenue has declined across the years, it still remains a significant portion of Jay Powell's revenues, meaning that it's still highly vulnerable to changes in its coal-related work streams and businesses. Now, secondly, Jay Powell is also seen to be underperforming on almost all aspects of climate action. And here we have listed out Jay Powell's short-term, medium-term, and long-term target, as well as its decarbonization strategy, as well as Capex allocation plans. And you can clearly see that, they're not exactly meeting any of their goals. In other words, there's actually a lot of room for improvement. Now, one aspect that really stands out is definitely them missing out on any of their inclusion of international assets. And I think it's highly worrying for us because it actually leaves the door open for continued investments in fossil fuel plants in key markets outside Japan. Moving on in terms of looking at the technology suite that Jay Powell is looking at. Here you can see that there are key three broad strategies that Jay Powell is looking at. Firstly, on one of the more important streams is lowering plant emissions of its existing fleet. Secondly, it's looking at deploying renewables as well as nuclear. And the third key broadband segment is looking at investing in grid stability and enhancements. Out of the three broad strategies, I think they have placed a lot of emphasis on looking at clean coal technologies to reduce emissions at their existing coal fleet. And these technologies include ammonia, hydrogen co-firing, co-gasification, and CCS. And this technology is based on what's going on in the market, has no clear path to commercialization. So if these technologies cannot be deployed at scale in time, Jay Powell would have no choice but to just choose between missing their climate targets or just shutting down their coal plants and scaling back on their operating revenues. That's what we've mentioned in an earlier slide. So I'd just like to end off quickly with looking at Jay Powell's Capex allocation. So Jay Powell's Capex allocation seems to be implying that it's not exactly investing for growth. It has consistently been investing between 20 to 30% on its blue mission related projects, which is a red flag because, as disappointing as it may be, Blue Mission 2050 is Jay Powell's way of future-proofing their future revenues and business to climate change risk. And it encapsulates the full spectrum of activities, including, renewables, nuclear, green investments, and clean coal. And under this broad scope, allocating 20 to 30% of it seems to suggest underinvestment in this segment. And what we recommend is that Jay Powell look to pivot its Capex spend to include more investments into offshore wind, which will help Jay Powell not only leverage on its existing capabilities and expertise, but also present significant potential in the future. I think that's all we have for us, and I'll hand over back to y'all.
Thanks, Jacqueline. So look, over to the audience for questions. just to re-emphasize, as we are waiting for some questions to come through, this shareholder group is around $3 trillion US dollars of assets under management. It's the first institutional investor co-filed shareholder resolution in Japanese corporate history by a group of institutional investors of this kind. It is the view of this group, or perhaps I'll put this one to Jason. Jason, could you just give us a bit of a high level response to Jay Powell's ability to survive and thrive in a decarbonised economy, and how the Blue Mission 2050 isn't quite meeting that requirement at the moment?
Yeah, I mean, I agree. I think, look, clearly they are making some efforts. I mean, I would say that they're marginal. Less than 2 gigawatts of renewable energy is fairly modest. We recognize, and I think this is one of the most debatable points around this area, there is a degree of pressure that we recognize that Jay Powell is under from the government post the Ukraine-Russia situation, given the kind of 5 to 10%, depending on natural gas to oil that Russia supplies, and sort of the kind of pressure to move away from that. So we recognize that there's pressure from the government to try and keep some of these coal facilities maintained or running on the interim. I think what our issue is that, look, as a meaningful shareholder, we want to figure out how they are managing climate risk and reducing reductions relative to the country target and their own target, and perhaps even accelerate that. And I think that's one thing that the Blue Mission 2050 doesn't really adequately sort of poke into, in terms of offering short-term and medium-term targets with a lot of clarity. And, and frankly, given the pressure that they're feeling from the government, maybe some other scenarios about how they compensate, which I'd like to see, maybe compensate for, perhaps having to run those coal-fired facilities for a little bit longer, i.e., expediting, some of the development around these technologies, or specifically expediting some of the Capex within renewables.
Maybe I'll add to that point, in Russia point. The energy security is a big talking point when we engage with Japanese utilities and the government, and it is important for a country with no or very limited natural resources. But so the coal is often used as referred to as the safest option when it comes to security. But Japan relies about 15% of coal import from Russia, so it's not a small amount, and so it shouldn't be used as a the sole reason for maintaining coal, certainly when we have a lot of other challenges.
Thanks. Now, I'm going to permit us to go over time by 3 or 4 minutes, just because of our technical difficulties. There are 3 questions in the chat. I'm going to ask all of them and then hand over to you, Sachi and Jason, for a final view. So, sorry, I'll address the first one. And the first one relates to how submission of shareholder resolutions in Japan works different to other countries, and just a clarification on that. So each jurisdiction has their own requirements. ACCR has filed or participated in co-filing in a bunch of jurisdictions. The threshold in Japan is you need a 30,000 share holding over a period of at least 6 months to open up the possibility of filing, which is more onerous than in other jurisdictions, but it is a single shareholder possibility. In Australia, for example, it's 100 shareholders of any size acting together, or 5% of a company. That's similar to the UK requirement. In the United States, it's 1 shareholder with a much lower threshold. But what I will say is that there's a regulatory environment that makes shareholder coordination, you need to be very careful about the size of the group you're coordinating with. So it needs to be under 1% of stock in trade in the company. We've been very attentive to that risk. And also the requirements of legally, validly putting a shareholder resolution, that is reflected in the design of our resolutions as amendments to the Articles of Incorporation. I'll ask the two other questions and hand over to Sachi and Jason. The first is, how do you estimate the significance of this shareholder proposal, as the first one in the climate domain in corporate Japan, which involves investors, except for there's a Oasis management to Tokyo Seikan of last year. So the first one is, what is the significance in the Japanese corporate landscape of this resolution? The second one is similar. How has the proposal been received by Japanese institutional investors? And is there a different political context, I guess, in Japan relating to Japanese institutional investors and listed companies? I'll go to you first, Sachi.
Can I just come back to the first question? Maybe we should also add that we did consider the option of filing a proposal to allow essentially what's an equivalent of, say, on climate type resolution. But for that, we also need to have the company articles amended in the first place. So that would have taken an extra layer of effort and time, and also feasibility was limited. So that's why we decided to go for this type of proposal. Maybe that's helpful. So yeah, so the second question is
how you estimate the significance of the proposal in the local corporate environment, and any response from Japanese institutional investors.
I think the previous years we've seen proposals put forward by a group of NGOs, and in my previous role at Hermes, I engaged with a lot of NGOs and on these proposals as well. And those proposals also got a significant support, but from shareholders. So I wouldn't say that they were ignored or dismissed at all. But I think for us, three major institutional shareholders to come together and co-file is a big step, I think. And we were very careful, obviously, in setting the wording to be able to resonate with a wider shareholder investor community, to as we explained it, to make the wording supportable, specific enough but not too specific or prescriptive, and also linking with obviously increase in shareholder value in the long term. So I think our announcement made the front page of Nikkei on the 12th May, and it has been widely covered and seeing attendance. I'm doing a separate group meeting after this one with the Japanese investors, and has got a very high level of interest. So so far, definitely having a high level of interest from investors, and I think it's shared among companies as well. Jason, anything?
Yeah, I'd add, I do think it's significant. Again, as Sachi said, it sort of made the front page of the Nikkei. And it was I think, done in an encouraging, supportive way. I think, again, this is a process of socializing engagements, of normalizing engagements. I think that, in the past, engagements, in sort of our experience, have without the teeth of filings, have had sort of a hit or miss type kind of expectation. This adds a bit more urgency, a bit more, clearly a lot more visibility and teeth to this. So it sort of levels up the seriousness of it. On one hand, I don't, it's not our preference to kind of be, to be this confrontational or I don't want to call it acrimonious, but sort of turn it in this direction. But I think it's just a sign that we've got to make progress and kind of revisit. This is an iterative process, and so we've got to start somewhere with some seriousness.
There's one final question which I do think is really important to address. So the question is it necessary to consider Japan's unique circumstances regarding the introduction of renewable energy? Japan is mountainous with few shallow seas, making it difficult to set up mega solar and wind power plants. In addition, as in Europe, power grids are not connected to neighbouring countries. Hence the thermal power, including coal, playing an important role. Sachi, would you like to address that?
Yes, this has often come up in a conversation with a lot of Japanese companies, and it is, I think, a genuine challenge. But for example, Taiwan, I think, has a similar kind of geography. It's an island nation and has lots of mountains, but they also have had their big successful projects with on offshore wind power. So, and Japan is, we are starting to see more of this type of investment happening. So, it's not impossible, and it's just that I feel that the pace is too slow, and also we often hear about the cost of renewables being too high, but that globally has come down. And yes, Japan has maybe some unique situations as well, but it feels that the conversation and thinking has got somehow stuck in a few years in the past and hasn't really moved on. Yeah, I don't know if Jason has anything to add, or Jacqueline.
Sorry, if I may just add very quickly, I think that the conversations that we're having in terms of thermal plants being needed as baseload has really been an ongoing discussion. But I would just like to point out that, we're looking at decarbonization and energy transition, and that is not an endpoint. It's kind of a journey. There are different ways to look at increasing grid flexibility to allow for, more flexible or the way to accommodate more renewables, that is definitely possible, to look at intermittent renewables and paired up with battery storage. That's all possible. Obviously, to answer that question, I'll need to have like grid modeling and have a lot of data to back that. And there are existing studies that have looked at the potential of a more renewables fundamental grid. But I'll just like to highlight that there are potential ways to do that, and there's a lot of technologies that can help. And what we can see now is that right now Japan is curtailing renewable to allow for baseload plants to run, and coal as a baseload plant is inflexible. You need time to ramp up and ramp down. So each technology has a different impact on the grid, and it's definitely possible for the Japanese grid to accommodate more renewables.
Thanks, Jacqueline. I'm going to draw this session to a close. But a final point is just that the level of drafting of the resolution, the non-prescriptiveness, the principles-based approach does accommodate the factoring in of those local factors. So what we're seeking is really an enhanced governance framework for the company, and a framework that allows for the ratcheting up of ambition. The current Blue Mission doesn't provide for that, in our view, and makes the company vulnerable across a number of different areas. So thank you very much to all of our presenters. Thank you to all of the attendees. We will please do get in touch if you have any questions. Jason, did you want to jump in with a final comment? You looked like no. Okay. Thanks, everyone. Take care.